we're trying to get consensus on the state of the world as the South African fund managers see things unfolding at the moment. Your gut feeling on where we're going from here? Are we in for horrific news flow on the international front?
Yeah, I think certainly on the macroeconomic front, I think we'll probably have a slew of bad numbers coming through, and the markets will then pause and pull back as a result of that. I think the markets themselves have priced in quite a lot, and you've seen a lot of it coming through from the corporate side, where the earnings have been fairly supportive. But clearly, you can't have earnings growing in perpetuity when the fundamentals from a macroeconomic point of view are showing a slowdown, especially in GDP growth.
Do you believe that there are opportunities in the equity space in South Africa?
Look, if you look at our market in totality, I mean, we're not, a dripping roast. However, we're not overly expensive either. We're trading the slight premium to our long-term average PE. However, if you scratch through the surface, I mean, there are some pockets of value. It's not deep value where it's, again, it's a dripping roast. Where there is such, there tends to be problems and risks, so you need to be aware. And then the rest of the market appears to be fairly valued. Again, depending on the outlook, for example, for the currency, which is a big driver for the commodity stocks, for example, and also on the interest rate front, with particular reference to the consumer, the state of the consumer, where we've seen a lot of our retailers doing exceptionally well over the last, sort of 12 to 18 months. However, again, being worried looking forward in terms of the earnings base being high and the ability of those companies to actually continue to generate the earnings to support their ratings.
Patrick, you gave us a list of shares in, as your top picks, and I noticed quite a few of them. BAT, Vodacom, are really defensive stocks.
Yeah, I think that's just my take on the current state of the market. I don't think this is a market to be, gung-ho and be ballsy. I think we do need to be, a bit more cautious. Rather look at valuation as opposed to momentum. I think the momentum in the market has, will probably slow down going forward, and valuation will continue to be the underpin for any investment strategy going forward. And if you look at BAT, for example, again, it's not cheap from a PE point of view, but it's managed to grow volumes quite nicely. It's managed to push up prices, and they've got decent exposure to emerging markets with a fairly decent dividend yield of about 6% in pounds, which is not to be sniffed at. Similar story with Vodacom. It's a dividend play more than anything, where you can expect up to 7% dividend yield going forward, just based on the amount of cash that they're generating given the current
Talking about ballsy plays, before you jump in there, Avenge.
Yes.
Now, we had Stephen Menchie's a minute ago in their Stocks and Strategy Amara SP read for August saying Avenge is an ad.
Yeah.
It's in the construction space.
Yeah.
Ashraf doesn't like it. There is risk there.
Yeah. As I said earlier on, where there is value, there tends to be a bit of risk, and the construction space is one that has been completely bombed out. It's fallen off from the highs of the sort of the 2008s all the way through. And if you look at the macro fundamentals domestically, at some stage, the government will have to come to the table and actually spend, whether to spare this economy going forward or to actually address the infrastructure backlog that is starting to creak. And the likes of the construction stocks will be the beneficiaries. And within there, I would say Maris, to me, is still a higher risk play. I would therefore look at Avenge, which, they are still better placed. They have a decent balance sheet with a lot of cash still in it. And if that sector were to start performing, I would say that they'll be the ones to look out for.
Okay.
It's your turn now. I mustn't be greedy.
You've got Exxaro and Anglo here, but the one that I think is more attractive in that grouping is Kumba Iron Ore. Came out with great results. 8% dividend yield if you include this recent dividend, and is on a PE of under 7.
My only problem with Kumba is that their margins are at record highs, and you've seen the ROEs, I think it's 140%, which is obscene for want of a better word. So that to me is not sustainable. And also, if you look at the fundamentals for iron ore, you do get a lot of that out of Anglos, for example. So, if you want a safer bet as opposed to being exposed to a single commodity play, I would say Anglo first and perhaps Billiton, and then maybe look at the other single commodity plays. But my first bet would be the diversifiers, with Anglo being the top pick, where I think there's a lot more scope for restructuring on the Anglo side. given the mess that they found themselves in with a bit of volume growth coming through, as opposed to Billiton, which in my mind can't put a foot wrong and therefore not that exciting.
Well, it's also priced for
it's
perfection.
Priced for perfection,
Exactly.
as opposed to Anglo, where you
Now,
could see the upside.
Yeah.
Why not African
Can you
Rainbow?
share this with me as well now?
Okay.
Right. I'll tell you what, let's try 1-1.
Okay, fair enough.
So my turn, and I
Okay.
want to pick up on a comment that Ashraf made earlier. That was that if we see a downgrade of the AAA rating in the US, banks will collapse. So are you standing by that comment? Can I use it?
I'm not saying, the financial sector
The
will
financial
collapse.
sector
Okay.
will collapse.
Yeah.
Looking at your exposure to ABSA, how do you feel about the comment from Ashraf?
Look, I think there may be some, sort of fall in sympathy, but I don't think our banks are that exposed to that extent where, the fall off should be justified. I mean, we saw this in 2008, where the likes of Lehman's collapsed, for example, and yet none of our banks had any exposure to some of those assets. So from a sentiment point of view, yes, you'll see a pullback coming through, but fundamentally, there's no real justification for our bank stocks to actually trade lower on the back of that.
Yeah, I'd agree with him on that. I'm speaking specifically about the US financial stocks.
I was waiting for you to qualify.
Just one other. I mean, you've got anglers here. What about African Rainbow Minerals? Looking at that business that has so much growth potential going forward with the new projects.
Yeah. Look, if you look at ARM and Anglo, and also if you look at Billiton, the one area of differentiation with ARM is that they've got manganese, and the other guys don't have the same extent in terms of exposure. And the fundamentals for manganese, in my mind, are still fairly poor. It would appear that there's a lot of stock still in the system. The prices have not really recovered, together with the other commodity prices. So, yes, you get platinum also out of Anglo. You get that out of ARM. There's a bit of gold through Harmony in ARM. And, there's no real differentiation other than manganese. So if you hold a different view in terms of manganese, then maybe you can look at ARM, because that's where the gearing is. But everything else kind of stacks up in terms of Anglo, in my view.
Okay.
While we're searching for consensus views, we're running out of time, but gold we've been chatting about, hitting new all-time highs, $1,675 an ounce. Short while off those levels, it was trading at $1,664 an ounce. Quick thought on gold.
Look, the precious metal itself, we do like. We think it is headed higher because I think, again, just given what's happened, what's been happening in the world, I think the real risk of inflation is coming to the fore. The gold companies themselves domestically, less so than the actual gold price itself, largely because of the cost implications. The margins are not quite there. There's production disappointments, there's strike action, you name it.
But still positive on gold, the yellow metal. Patrick, we're going to have to leave it there. Thank you very much for your time.